Kitco Mining special coverage of the Deutsche Goldmesse is brought to you by Faraday Copper.
Crescat Capital sees the resource space up close with investment in junior miners. Tavi Costa is portfolio manager at Crescat Capital. Tavi, welcome back to Kitco.
Thanks for having me.
There has been some reports about a possible soft landing. Of course, the Fed is tightening right now, but what we've seen, the financial press is reporting that there has been some nice drawdowns in the price of items, some broad price in items. We still see a robust jobs market in the US. There has been some layoffs, but the layoffs seem to have been kind of where there's been more excess, you would say. Thoughts?
Well, I'm definitely, I don't think we're going to see a soft landing at all. I think one of the best indicators to look at that is the percentage of yield curve inversions. There's many ways to look at yield curve spreads in general, and I think a lot of people do a great job looking at those, but we calculated a more comprehensive form of really looking at all the percentages of the treasury curve. And what we see is that right now, about 76% of the treasury curve is inverted. Every time we've seen this, it coincided with very steep recessions. So it's hard to believe it's going to be kind of a mid-cycle slowdown. I don't think that that's going to be the case. And I think that's a natural debate in the macro community. Is this just a mid-cycle environment? And I don't think it is. I think it's a real flush in markets. And you look at most of the things that used to be leading the markets, the ARK investments, the software investments, even some FANG stocks, they're all already below their March lows of 2020. So I think that that's a roadmap for things. And ultimately, I think we're going to go there.
Tease that out a bit more. Tell us about what you're reading into the yield curve, what that's telling you, and what that impacts are going to be upon the broader economy.
It's fairly simple, actually. So it's just looking at, instead of looking, let's say, at 10-year versus 2-year yields, you take all the possible spreads in the yield curve. So there's about 45 spreads in the yield curve today. And you capture all of those and you see how many of those are turning negative. And right now, we used to be most of the 10-year versus some of the smaller yields or short duration yields were inverting. Now we're seeing across the board, especially between the 1-year to 5-year, all those mixes, all those spreads are all inverting right now. And that's just telling of how the credit markets are starting to think that we're probably going to face a recession. That's a very important leading indicator. Usually, credit markets are usually a very good leading indicator for things. So we believe, and not only that, I mean, if you mix with what's happening with the consumer in the U.S., in my view, I think the consumer has never been so squeezed. You have saving rates being at multi-decade lows right now. You have what's going on with mortgage rates. Now they're at levels that we only saw in 2001. And buying conditions for housing has been dismal. Right now, if you look at that I think the University of Michigan put out an index on that, the lowest level since even the 80s, when we had a classic stagflationary environment. So the consumer is getting squeezed. Their wages are not growing faster than inflation. They're actually in real terms is negative right now. So it's hard to believe that that's not going to translate into also a slowdown, if not a major contraction in earnings, which will then lead to labor markets where you touch that in the question, which I think it's the next shoe to drop.
Where are we stumbling towards right now, Tavi? What is it? Is it an inflationary period? Is it a recession? What's going to be happening?
Well, it's a long-term question because I think the next decade will be an inflationary decade, but I think we've seen a lot of the very first wave of inflation, in my opinion, as well. I think we're probably approaching peak cycle as well for hiking rates and so forth. Now, in terms of probably what's ahead, I think cost of capital will stay very elevated, which means there's a lot of repricing still to happen in most markets. You look at technology space and some other mega cap names, I think there's a lot more pressure for those. There's a good ratio I put out. I'm not sure if you looked at it, but it's a mega cap stock relative to the S&P 500 equal weighted. And if you look at that chart, it's been breaking down from a support. I think that we're going to continue to see mega cap actually leading the way to the downside. We were very bearish on software stocks and more of the crypto space in 2021. And that has been shifting now. We're very bearish on mega cap. I think that's really going to be the next issue that we're going to see in markets, and it's just getting started.
Define Megan. I saw in your past interviews that you have been shorting these stocks. But are they just the big tech stocks, or
the big cap? I would say Microsoft, the FANG stocks. Amazon used to be a big short. Now it's basically near its March low, so we have reduced that one. Microsoft is a big short. I think Apple is one of the best ways to really express your views about the geopolitical issues happening. If you think of a place or an organization that can get hurt by a deglobalized trend that has been benefiting from cheap labor from China and other places, that is Apple. And it's just hard to believe it's not going to get hurt even further. And on top of it, it's a consumer discretionary business where, knowing that consumer base is getting squeezed, it's hard to believe that that's not going to impact their business as well. And then you have the Teslas of the world. It's a smaller short for us. The Googles as well it's a little smaller too. But I would say the majority of the mega cap, even the MasterCards and Visas, all those are very interesting shorts in our opinion. So we've been pressing, really increasing our exposure there.
You mentioned it, talking about China and Apple's exposure to China. You tweeted out just recently about, I think it was the falling number of treasuries that the Chinese government is talking about. Talk broadly about the Chinese economy right now.
It's been of our view that China is facing a credit imbalance, and it's been. I don't think a lot of people have seen this the same manner until recently. China has been facing a domino effect. I think it started really in 2021 when we had the ADRs, or the Chinese technology companies is starting to suffer really for government crackdowns. And then after that, we saw the real estate market starting to have issues, and some of the banks. I mean, if you remember back in 2008, some of the banks got crushed. Today, if you look at the largest Chinese banks, they're down over 50% from their peak. And there's not enough people talking about what does that mean to the overall economy there. In our view, it's going to translate to further pressure in the currency. I think the currency is probably going to face a much bigger devaluation. Back in 1993, 94, the Chinese yuan devalued almost 1/3 of its value on one day. And this is kind of unimaginable today, in my opinion, and I think that's very likely to happen. And one thing it's important to check, I think, for those is sort of having a list of things that usually precede a large devaluation of the currency. Some of those are the selling of foreign reserves, which is what's happening in China, the amount of reserves relative to their money supply. You can see the banking assets relative to GDP, the growth in banking assets relative to other places. And so all those boxes are checking as a risk for a very significant devaluation of the Chinese currency. And so we've been always skeptics of that in a very much more in an economic way than a political side of it. And on top of it, you think about the deglobalization trends that we believe strongly that's also what's been pressuring the inflation side. I don't think that's the end of it. I think that's the beginning. So economies going away from China will force the economy to actually weaken further. And so we've been very bearish on China in general.
What does that do to resource stocks? I mean, China is just a huge market for metals.
Yeah, I mean, I think a lot of people think that China has the upper hand on commodities. I think the opposite way. I've been covering the Chinese market for a long time. And it's incredible that just now those issues have been exposed at a time when the commodities have been rising. And in my opinion, what's going to happen is we're changing the balance of powers of economies, and we're seeing countries that are natural resource and related and have those economies that are led by commodities in general, like Brazil, are likely to do better than places like net importers of those, like China, for instance. And so we've been looking for ways of exposing that in FX markets, like being long not only Brazilian equities, but Brazilian assets in general, versus being short Chinese equities or Chinese currency and other things. And we've been doing that for a while. Now the focus has been on the Chinese currency mostly. And it's really owning gold in the Chinese currency. And so we think ultimately is when you look back in other times when we had issues with emerging markets and other currencies that collapse, sometimes you can have that coincide with a crash in equity markets. Sometimes it's just a currency. But one common thing that usually happens is that gold in local currency terms tends to appreciate. So that is one of the most important trades. And by the way, going back to the yield curve inversion, which is related to all this, empirical analysis of that is that usually we tend to see gold to S&P 500 ratio rising. And so it's really, it goes back to the commodities to equity ratio, owning tangible assets versus cheap currencies, or I should say overvalued currencies. And that's really the opportunity. I think there's a lot of ways to express that view in markets today.
Let's keep going with talking about what works. You've talked about what doesn't work and talking about the mega caps as well too. You did mention Brazil, for instance. You talked about gold. What's some of your top plays with you talking about this inflationary environment and recession?
Yeah, I mean, we've been creating a basket of commodities for the last 2 to 3 years. The focus had been in many of them mining space, which hasn't worked very well. And energy. Energy has worked very well along with agricultural commodities. And I think we're shifting now from those more cyclical things into maybe gold and some other very cheap exploration stocks that we've been owning for a while now. I think that's, if there was ever a time to be accumulating assets in the space, that time is now. I think there's potential for multi-bagger types of returns in the following years for most of those, the mining space as a whole. Energy is something that is interesting because it's really cheap, fundamentally speaking. And historically, we've never seen companies doing, having free cash flow yields of 10, 15%, paying high dividends as well. Now, one thing that is a problem for me is if you look at the performance year to date of energy over the course of 30 years, we have 2 back-to-back best years ever for those. So I think 2021 was about 50%, and 2022, this year, it's been about 60% return. It's hard to believe that's going to maintain going forward. So I think it's not really a question of should we be long, but how much? And so sizing has been shrinking as far as what we think it's going to be, should be the budget on that. Or sizing in terms of mining has been increasing. I mean, you look at the PE ratio for mining stocks, it's one of the lowest levels we've seen in history, lower than even what we saw back in 2008. So I don't know when things turn, but certainly fundamentally speaking, I don't think things have been this cheap before. So it's at a time when everyone is such a skeptic in the industry and very few generalists really entering the space. And so I think it's time to be accumulating assets here.
Let's wrap up with those 2 commodities. You did mention the word 10-bagger.
Yeah.
You mentioned the word gold. There's a lot of ways to look at gold. There's the commodity itself. There's royalty and streaming companies. There's ETFs. And then you can go down the list from seniors to mid-tiers to developers to juniors. What in that space do you like?
Well, let's start with the fact that I think everything looks cheap in the space. But then the question was, what do I really like? Well, I think that this industry will go through an exploration age. And it's been our view that we're going to go through that. And if that's the case, we're going to see more M&A towards high quality assets in exploration in general. And remember, majority of the billionaires in this industry made their money in exploration. They found a discovery, and the appreciation, the speculation environment that happened during that period is precisely what made those guys billionaires. And so I think there is a case to be made that you can invest in and create a hybrid venture capital kind of fund where you're chasing those big discoveries at very cheap valuations that you have currently. So there are companies trading a very low market cap values right now at a time when they actually have discovery holes. They have significant amount of success in drilling, and that's not being perceived by the market just yet. So I think that those are the biggest opportunities. The development phase also looks really cheap. I think that's undeniable. It's and somewhat is also I think it justifies part of because of the inflation, the cost of building a mine has increased. But it's easier to navigate that space just because of it doesn't require the same knowledge in the geology side as it requires more of a financial analysis of how much it's going to cost for you to get to a production stage. Thinking about the whole thing, I think the exploration side is the most attractive. And if you believe that we're at the beginning of a cycle, I think you want to own the stuff that has higher risk as well, with also higher opportunities. And so that's really where we've been deploying capital at right now. And
lastly, energy. Energy is a big space. There's oil and gas, which has obviously been underinvested, and then we saw the big spike in it. We also have the theme with critical metals and energy transition.
Look, I think energy is a very interesting play. I think there's a lot of ways to do it. We've been doing mostly in mega cap and some mid cap names. We hire a geologist that work for Shell for over 2 to 3 decades, and she's been helping us to select some of those names. And that's kind of where it started, really, this whole idea of investing in Brazil, is how many assets we found. There are energy related and agriculture related too in Brazil. And really it came about by looking historically how countries like that tend to do very well during times when you have commodities to equity ratios being at 50-year lows. And you're at periods like this issue with the U.S. economy and developed economies is starting to face inflation. Is something that usually you tend to see a large allocation of portfolios into tangible assets. And I think that ultimately will drive countries like Brazil to do better. But the energy space, I think, this move away from oil and gas is real, and like it or not like it. But it will take some time for that to occur, and so it will create opportunities. And I think there's there are companies today paying more dividends. If you look at the median dividend yield for energy space relative to other parts of the market, it's the sector that pays the highest amount of dividends right now. You don't buy an energy company because of dividends, but it goes to show how much of excesses are in other parts of the market relative to natural resources right now.
Tavi, thank you very much.
My pleasure. Thanks for having me.
My name is Michael McCrae at Deutsche Goldmesse in Frankfurt. You're watching Kitco Mining.
Kitco Mining special coverage of the Deutsche Goldmesse is brought to you by Copper.